Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is Monday, March 10th, 2008. A statement made by the CEO of Dubai International Capital about Citigroup's future has been clarified, but not before creating a costly public relations nightmare for the investment bank. Last week, CEO of the Dubai private equity firm Samir Al-Ansari reportedly commented on the $20 billion Citi raised to bail out its current trouble. He said, quote, "It will take a lot more than that to rescue Citi and other financial institutions." Citi stock sank 4% on his words and, according to Dealbook, prompted Citi CEO Vikram Pandit to announce the bank is well capitalized. Apparently, Al-Ansari also got a phone call from Michael Klein, co-head of Citi's investment bank. Whatever Klein said has not been made public. But late last week, DIC issued a new statement saying, quote, "Dubai International Capital has never expressed an opinion on the investment merits or financial condition of Citi." Staying with hedge fund news, investors in the remaining of two original Peloton Partners fund may get back less than 50 cents on the dollar when it liquidates. According to the Financial Times, the surviving multi-strategy fund lost roughly $900 million, making its value about 42 to 46% of its former self. Though the firm did not comment on the situation to FT, the paper did say co-founder Ron Beller had informed investors that he was working with banks to try to salvage as much as possible. And in other hedge fund news, the benefits of diversification through alternative investments appear to evaporate during financial crises. Reuters reports that wealth manager clarified-but noted that the lack of correlation between the markets and alternatives such as hedge funds, private equities, and commodities usually can cushion the pain in a time of turmoil, but not these days. Clarified-but found that since August, even commodities have been strongly aligning with stocks, hedge funds, and private equity. And continuing with hedge fund news, while funds of hedge funds now account for a bigger portion of the hedge fund industry, they continue to trail behind their hedge fund peers in technology. But as competition for the lucrative institutional business heats up, funds of hedge funds are turning more to software companies to help distinguish themselves to prospective clients by demonstrating their tech infrastructure sophistication. This has given rise to a new market. Senior analyst at consultancy A Group, Denise Valentine, says there have been 5 firms that have dominated the hedge fund market over the past decade, but there is plenty of new competition in this market, and these leading vendors must remain vigilant. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge fund channel online and read the latest developments.